So I'm gonna give a little brief introduction as I always do. So welcome guys. I know it's Saturday at 9 p.m., but I guess this works for a lot of you, especially since I guess it's after dinner time, but I haven't eaten dinner yet, so I'm pretty hungry. So I'm definitely looking forward to dinner. But today's November 2nd. It's a pleasure talking to you guys. My name is Kevin. I have my business partner here. His name is JP. A little bit about me. My username is the Market Bishop, but my real name is Kevin. I've been trading for 11 years now. My primary strategies are price action and volume analysis paired with trend analysis, trend and pattern analysis. Um, I've been swinging options majority of the times, but I also do day trade options. Currently, since I'm still in college, since I'm 23 years old, I do unfortunately have to only stick to swinging most of the times, except of course, you guys know on Fridays I'm able to day trade, right? But it's definitely been a long ride. Options is my primary go-to. I do also trade futures, but since options is my baby, you would say, I've found really great success with it over the years. Over here, I got my business partner, JP. He's been trading way longer than me, and I think he's the longest, he's the only other person I've seen with 20 years on the platform of Discord. He's where I'm more of a technical analysis trader. He's more of a fundamental analysis trader. He shines where I lack, I've never really looked at fundamental analysis, so I always find it very important to bring him on and let him speak about very important things that we should know about. He's been trading for 20 years. He's grown his account multiple times, and he's found a lot of success. He's been trading before I even was no, I was born actually. He's a dinosaur. So, but yeah, before I hand it off to JP to talk about the overview of what happened this week, whether it's the important earnings or important data, I want to ask JP, is there anything you want to tell about yourself?
No, you can just go ahead. Let's dive right into it.
All right, yeah. So, as you guys know, we had pretty important earnings, and JP's going to overview it because, as I said, he's more of a fundamental analysis guy, and he has a lot more insight and knowledge than I do. But we had important tickers like AMD, Uber, Amazon, Ford, McDonald's, Roku. So I'm going to hand it over to JP. JP, do you want to keep my stream on, or would you want to stream your screen?
Let's just keep your stream on. That way we
Sure.
don't have to be switching back and forth. So, the first thing we're going to do is we're going to talk about last week earnings. As you can see on the chart in front of your face or whatever you want to call it, there were some significant companies that were reporting that are heavily weighted both on the S&P and the Nasdaq and the Dow Jones. Um, More so, the importance of last week was not so much if we were going to beat earnings or if they were going to be weak. It was more along the lines of understanding what the forward guidance for most of these companies were going to be. Um, it's interesting to see how, for the first time in a very long time, forward guidance has become a subject matter, and all of this has to do with top and bottom line numbers that are affected by obviously inflation and currency. Starting on Monday, one of the most anticipated trades that was happening within the internals of the market was waste management. Um, Waste management, for you guys that live in Florida or for you guys that are familiar with the company, it's exactly what they are. They're a garbage company. They pick up the trash, and waste management was something that was being heavily watched by S&P traders because previously on their last earnings that they reported, they actually missed. They missed on earnings, and it was a shocker because who would have thought that a company like Waste Management would decline in sales? Um, but it went to show you that what was happening at that point in time, because of the amount of cost that it was, that let's just say either contractors, building developers, or even your local HOAs, homeowners associations, um, were paying for waste management, unless, well, in this case, the cities were paying, was extraordinary. So they were looking for alternative options. Um, Such is the case that Waste Management had to make a decision to adjust their prices. And lo and behold, because of those obvious changes, they actually came in and beat earnings and had phenomenal gap up. The company was up, I believe, 6% after the earnings beat. Moving into Tuesday, one of the most anticipated companies that everybody was watching was AMD. And I know that a lot of the guys that we trade with were watching this company because Lisa Su, who's one of my favorite CEOs, is someone that I really admire for what she's been able to do with the company. And people were they were sitting on their seats, really concerned about what was going to be the forward guidance and their new developments in AI. And lo and behold, AMD came out and they missed earnings, and they actually gave bad forward guidance, which is a shocker considering that they're such an innovative company. That actually set the stage for what would eventually become a very shaky environment into the next couple of earnings. If we went into Wednesday, we all saw that we were on our
JP,
pretty much. Yeah,
I'm
go
so
ahead.
sorry to interrupt you. So as you guys heard, I never really knew fundamental analysis or knew how to understand the earnings part until I met JP. So a lot of people here actually don't understand what exactly forward guidance is. So is there a way you can like
Yeah,
simplify
let
what
me
that
just.
means?
Yeah, I'll dive into that once I just complete
Oh,
these
gotcha.
3 days. That way
Yeah,
we
yeah.
can have an understanding of the importance of what's going on. Microsoft and Meta. Microsoft actually came in and they beat, but again, another soft issuance on guidance. Google came out. I'm sorry. Meta came out and was a complete opposite. They actually did a phenomenal job and they beat earnings, and they went ahead and showed the market that they're still a very resilient company. Intel, same. Intel came out, did a phenomenal job. Amazon did a phenomenal job. They beat on the top and the bottom, the bottom line, and of course they gave great issuance and forward guidance. This was the heavily weighted tech week that everyone was waiting. Um, and now that this is over and that we've gone through what we could say are the Mag 7 or the Magnificent Four, whatever you want to call them, um, people started to really understand how important these earnings are, because technical patterns can be phenomenal for setups. But if you don't understand the fundamental principles of how a company's inner workings happen, you can lose a lot of money. So when we always talk about forward guidance, we talk about companies issuing what they believe are going to be their revenue streams for the upcoming quarters or the upcoming year. Whenever there's a slowdown in the economy or in the company's growth, when earnings come out, they will issue a statement saying that their expectations have been lowered. What does that mean? That means that if the company had come out and said, let's just say on Q3, right, the third quarter of earnings, they said, well, we believe that in the fourth quarter, we're going to do X amount of dollars, and that surpasses on whenever they report earnings again, they surpass that number that they were guesstimating. That means that they've beat on their forward guidance. When they give a number and the numbers come out and they miss on their earnings, companies have a tendency to lower their guidance for the upcoming quarters, meaning that if they had a slow quarter, there's a big probability that the upcoming quarters are going to have to lower the expectations of what the shareholders are expecting. Guidance is very important when it comes to very crucial times in the economy, like where we are right now, where we are having an inverse effect in interest rates, as opposed to, how can I say this? Rates for mortgages are going up even though the Fed is cutting, and that's not supposed to be happening. So now everyone is sitting here saying, well, what's going on? What's happening? Is guidance important? Are these companies really not making money? Have these companies overinflated their numbers? Why are companies having a difficult time borrowing money? because the interest on borrowing money is so up? Are they lowering their guidance because they're paying so much money in interest? So guidance is very important. And I think that it's very important. I think it's imperative that if you're going to be trading a portfolio or being a money manager for your own account, that you understand those principles of what those earnings mean, what those guidance are, and what top and bottom line beats are. Remember, top line means gross, bottom line means net. So you always want to be watching where these companies are with top line, bottom line, and guidance. If a company beats on earnings and they do a great job, they crush it, but they report that they're going to have to lower their guidance for the upcoming order, the company stock has a tendency to crash because that means that there's no more growth, or there's weaker growth than expected. Case in point, AMD. Everyone was looking forward to their new innovative chips for AI, but guess what? They came out and they said, we're going to have to lower. We're not up to par with the technology, or for that matter, have the revenue stream for research and development to keep up with companies like NVIDIA. So that's why understanding guidance is very important. And if you grasp it, it'll help you with your trading.
Yeah, that's a perfect explanation. So, heading on to next week, which personally are when it comes to earnings, which companies are you personally looking out for, and what do you think will hold a heavy weight towards the market sentiment for next week?
Considering what's coming up in the next weeks, we can see that it's going to be a lot of. We have a combination of obviously energy, biotech, and healthcare. I really do believe that Palantir is going to be something that everyone is watching. It's such an innovative company. It's a leader in the industry now. It just got into the S&P. And I think that if Palantir misses on earnings, which I doubt they will, it's going to give a shock and awe to the system, because it's become such a hype company. And I think that it's a little bit overweighted right now. And that if for some reason they were to say that things aren't as great as we expected to, we can have a massive sell off. I'm looking at Palantir. I'm 100% looking at ARM. I think ARM was one of those companies that when it first came out, everybody got on the bandwagon and then it just dumped, it just puked everywhere. But I think that ARM is going to be an alternative to AMD and NVIDIA when it comes to the chip sector. So I think that they might actually surprise everyone with a beat. I'm very interested in what Moderna is going to be doing. Um, I'm one of those individuals that believe that Moderna is more than just a pharmaceutical company. I think that they're a technology company. And with this mRNA technology that they have, I think that it's going to really revolutionize the game. Despite whatever your opinions might be of their CFO or their CEO, I think that that's a company that if they beat earnings, it's going to fly. But if they miss, this is going to be one of the biggest Wall Street scams in the world. Also watching DraftKings because I want to see if it's true what I know has been true throughout the 20 years that I've seen the market, where in times of pain in your pocket, people resort to gambling. So I'm curious to see if DraftKings is going to beat. I think Affirm is something that we all have to watch because it's part of this whole concept of the buy now, pay later system. If we see that there's an uptick in the use of Affirm, we're going to start to really understand where the economy is at because it's just basically advanced layaway. And for you guys that are old farts like me, you probably went to Marshall's or one of those stores with your mom and they would put stuff on layaway and you would pay a percentage of it just so they can hold it until they got their paycheck or they had the money to buy it, right? Um, those are the big ones that I'm going to be watching on a personal level, just because I'm curious to see how these companies are going to do. I'm very curious what HIMS is going to do, and I'm very curious what Celsius is going to do. Both of these companies are companies that I'm invested in. I think HIMS is revolutionary for what they've done when it comes to men's health, eliminating the visit to the doctor or any embarrassing conversation with a nurse, and Celsius being the new Red Bull. I think that if Celsius really shows that they have great forward guidance and they can beat on the top and bottom line. This is going to be one of those companies like Monster Energy that just becomes a darling for Wall Street.
One thing that actually came, I believe, after close on Friday was the news that Intel was removed from the Dow. Is that correct?
Yes, Intel was taken out by taken out of the Dow and replaced with Nvidia. Um, it's kind of funny that that happens because we always said they would never take Intel out of the Dow because why would they knock out an American firm? But that's Nvidia was up 7 points after that. You know, the rebalancing of the S&P and Nvidia being added to it, it's going to be it's going to play a big game on how ES contracts or futures contracts trade. It's going to be a huge impact on how the index moves. And I now think that because of that incorporation of Nvidia into the S&P, we're going to have a lot more volatility on what people like to consider the boring trade, right? Which is the S&P as opposed to the Nasdaq.
So usually, like whenever I think the misconception is when stocks are removed from the, let's say the S&P 500 or the Dow, that usually, stocks end up tumbling afterwards. But we've seen like in other instances, such as what's it called? I think it was Etsy. Etsy, I think it got removed from the S&P 500 around the time that Palantir got in, right? Is that true? Or I
I,
just, I just, yeah.
your quote. I can't quote you on that, but I'm double checking as you speak.
Yeah, but basically what I'm trying to say is sometimes stocks, behave actually relatively nice to being removed from an ETF. Sometimes because what that means is there will be a lot more volatility in the stock because that's just how things work, right? When you get added into a ETF, like let's say the S&P 500, you're going to be reducing the volatility because there's going to be a lot more money going into the company. So yeah, I actually got, and I'll talk about it later, but I got into Intel calls on Friday, actually right before close. I don't know if you guys looked at that, but I was getting in because I just saw this really nice candle that I really ended up liking on the daily. And I think the 2 hour close was very interesting to me as well. So that's why I got into these calls. So now, news came out, I think like it was an hour and 30 minutes after market close. So it's going to be interesting to see how Intel reacts to this. It can not care. It can either go down all the way to, maybe $20, or it can actually try eventually testing this gap that I wanted to fill, which is between $28 to $24.79. But yeah, JP, do you have the confirmation?
Yeah, Etsy was removed from the S&P on September 16, I believe.
Yeah, and I remember the Etsy chart. I could go check. The funny thing is when it got out of the S&P 500, it actually reacted pretty nicely. Um, yeah, you could see when it got removed, it gapped up pretty nicely. But you know, what do you personally think this holds for stock like Intel? Who had bad earnings, prior earnings,
Well,
and
I
then
mean, that's where I said that they actually beat on earnings because for me they beat because they beat on revenue.
yeah,
They
exactly.
missed on EPS, and what was funny was the immediate reaction that the market had the next day when everybody sold it off, right? I mean, they just puked it. That's an old Wall Street saying. The market puked Intel on earnings, right? Um, they hated it for a minute, and then when they realized that Intel actually crushed revenue, the market it just flew up. If you show it in extended trading hours, they really beat by a lot. They beat by almost 2%. As for what's going to happen to Intel now, because it's not part of the S&P, I believe it's going to become one of those companies that yeah, people are going to be invested in it, but fund managers aren't going to be looking at it with the same respect or weight that they used to because it's no longer part of a of a it's no longer part of an ETF that that would be influential for it to go up or down collectively. So
Yeah.
Intel, you're going to have to treat it like its own individual company now and trade it on technical setups and wait on reports for earnings and, see how it does and hope for the best. Remember, there's that old saying that, you know, you want to trade what's listed on the indexes. If you're an
Yeah.
S&P trader, you trade what's on the S&P. If you trade the Nasdaq, you trade what's inside of the Nasdaq 100. Not those flimsy companies that are just hanging around trying to find an identity of where they're going to belong. So yeah, it is what it is.
Yeah, no, it's absolutely interesting to see, such a what used to be a strong company like Intel, all the way down to a point where it's removed from the Dow. But who knows? You can eventually have a rebound if they change things around. You never know, right? But yeah, I mean, when it comes to that, we'll kind of segue into the stocks that we're looking in or tickers we're looking in for next week. For me, my list is pretty short. I think for me, I'd rather wait and see how Monday opens and see how the market's reacting. Just to what happened last week. I think
I
there's
mean, yeah,
still,
well, you
you
got to
know,
take into account the market still is absorbing that the 12,000 jobs,
oh yeah,
from I mean, we were supposed to add 100,000 and we added 12,000, and that's the lowest number we've had, I think, since 2008. I can't even remember what it was. But yeah, the economic data that came out was really it was terrifying. You know what I mean? I think it was kind of funny if you were watching the futures market, how everyone kind of reacted positively when the number first came out. They're like, oh, 12,000. Oh, great. Oh, yay. I sound like Kamala Harris. Sorry. Everything is great. There's nothing to worry about. And then the market just said, nah, 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 this is actually really bad. You know?
yeah,
I will tell you this much. Going into next week, I personally am not looking at anything because I know what's going to happen. I've already traded through, wow, I started voting at 18, so I've traded through quite a few election cycles. Um, and Monday is going to be, I think, a very, very low volume day. I think Tuesday, there isn't going to be anyone trading. And Wednesday, if we're able to have a result by Tuesday night on who the president's going to be, we're gonna have to absorb that information and see which sector is really gonna pop. Um, I think all setups are gonna get invalidated
yeah,
unless we're trading something that's completely, unaffected by by election results, right?
yeah,
So,
absolutely.
yeah,
Oh yeah, yeah. I was just gonna like add on to like, I haven't obviously traded as many cycles as you have, but whenever it comes to presidency and all that, I kind of you could take a little bit of the backseat and just let things play out. Because you can't, as you said, technical setups, they do work, but in times like these when you have very important, such as an election, you could never know what's really going to happen. And Kamala Harris getting elected might be a different effect versus Trump getting elected, right? So there's a lot more that needs to be digested, and we can't really predict that since we don't have the numbers. So yeah, it's a really interesting take. So I mean, yeah, I mean, when it comes to me, I mean, it was just Intel that I had my eyes on, and the only reason is because of the setup on the 2 hour and the daily. But even this, this might be invalidated because of the news that came up Friday. When it comes to you, JP, is there any specific tickers you're looking at?
MSOS.
Oh, you've been talking about this. Yep.
MSOS, as most of you guys know that are here that have been following our live sessions or the guys that just trade with us. I'm a real estate broker. I've been doing this for a couple of years. My mother's actually been doing it for almost 15 years. She's been a broker. Um, she was an agent, then she became a broker. Same thing with me. I was an agent, became a broker, and we specifically work with the cannabis dispensaries. We scout their locations and we build them out. And I am of the big belief that in Florida, Amendment 3, um, the amendment to make marijuana legal in Florida is going to pass. And that is going to create an influx of growth in companies like TrueLeaf, Curaleaf, Green Thumb, Glass House. These are all dispensaries, right? If it doesn't matter what state you're in here in the United States, you've probably seen a Curaleaf or a TrueLeaf dispensary somewhere near. If that amendment passes, I think that cannabis is going to be the next big trade for 2024. I believe that it has significant impact to the stock, a significant impact to the stock market if it does pass, because once these stocks start moving to the upside, it's going to catch the attention of fund managers, and they're going to have to take positions on it. I'm front running this trade, as you guys already know, the people that have been here with us. I originally took MSOS and caught the massive move that it had on, I believe it was October 22nd. We rode that, we rode those January 10th, those January 2025 $10 contracts. We rode them and they went all the way up to like 60%. I covered most of my profit right at that 782 level. And then what I did was I waited for that massive pullback, which is exactly where you have that 660 level. And I bought a bunch of shares. I actually initiated a position at 740, and then I added more at 660. And as you can see, it popped about 4.5 or 5% on Friday going into the elections. And once again, there's a trend line on it that if it goes, it goes. It's going to break, and if it breaks, it takes out that 735 level, and then it's to $8 from there. So this is the one thing that I've been watching that I'm completely focused on, and I have a lot of my cash position involved in this trade. So yeah.
Yeah, I remember. I think it was 2 sessions ago you talked about it, the MSOS. I know a few people actually who took the trade with you here, from just the live session thing. So it was a really great trade. I'll definitely tell you.
And I'm still in
Um,
it because I'm a believer of it. You know what I mean? I'm
yeah.
not. That's why I bought shares. And then the last one I'll do, and then we can just sweep through the Ask Us section. EQT.
Oh,
EQT. This dog. So I had this. I've been a big Nat Gas fan for the past couple of weeks. I got into this trade about a week ago. I did take a risky chance of trading it into earnings. They beat earnings, and then of course, why would a company beat earnings and go up, right? Well, it did go up. I was up a significant amount, and then we had this big pullback. I am still holding shares. I believe that Nat Gas is going to be a phenomenal trade regardless of who wins, because I think that the drill baby drill is going to be both for the Democrats and the Republicans, and I think fracking is going to be a big substantial part of getting the United States energy dependent again. And one of the reasons why I'm in this nat gas trade is because I feel and I believe that we don't have enough electricity in this country. I don't think we have enough power grids in this country. And the amount of data centers that we need, especially now with AI technology, and the amount of power that we need, it has to come from somewhere. So I wouldn't doubt that nat gas is going to be something that we start really exploring as a means to an end. An ends to a mean or means to an end? Means to an end. Yeah.
yeah. No, you're definitely right about the power thing, because yeah, I mean, how many times have we seen like outage somewhere across the United States? So you do have a point there, especially with all the growth in the AI industry, as you said. I think this. What did this have? There was a trade recently. Oh, remember when we talked about Eura 3 weeks ago, right?
This is toxic. I don't even want to see it.
Ah,
It
yeah,
just
yeah,
hurt my
yeah.
feelings.
No, 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 no. Okay. I got in it. I don't know why this guy didn't get in it, but we actually saw one of I forgot who told
One of
us.
one of the guys in this group put out
Yeah,
that trend
yeah. He
inside
literally
of
was like,
the
yeah. He literally he was like, hey, look at Eura, and we looked at Eura, and I think it was right over here. I'm like, oh, that bull flag looks really nice. I ended up taking it on Monday, and oh my goodness, that thing just skyrocketed. And the funny thing is, on the live session itself, JP talked about since this is an ETF, we should be, whenever you're bullish on an ETF, you want to always look at the major holding that's in the ETF, and that was LEU.
You
And
took that, didn't you?
no, I didn't take this. I took Euro instead. But this stock, like, this went 25% from the entry, and now I think it's up like 40% or 30% or something like that. But it's kind of crazy. So yeah, I mean, and the reason also additional to this technical setup, the reason why uranium ETF went up is because there was a news that came up. Uh, you could correct me if I'm wrong, JP. That basically stated that like Microsoft or like Google
Yep.
is gonna be working with like uranium facilities or something like that, to like power their data centers.
Yep.
I think.
Uh-huh.
Right. Yeah. So, yeah. I always believe like technical setups, and when it comes to price always gives away a little bit of a hint of news that might come up. Not always, but sometimes, and it definitely worked out here for Eura. So yeah, it was just funny because you talked about the whole data centers thing. uh, but yeah, I think we're going to go ahead and look over the tickers that you guys want us to look at. You could feel free to post it in the Ask Us chat, and then JP and I will look at it. So the first thing
Be-
we'll look at, yeah.
Before you jump into that, I would just say if you can do me a huge favor, if you can just
Mm-hmm.
go over really quickly, just so people understand where we are on market sentiment wise on NDQ, SPX, and
Oh,
DJI, the
yeah.
actual index themselves, just so people can see where we are. Yeah. And look at that. That is not looking good.
Nah, this is completely bullish. All right.
I don't like that. I don't like that candle, that last candle.
I think like you do have a point. Even if you take away the last candle, which is bearish, right? You
Yeah.
do have to consider the fact that you had an attempt to reach all-time highs and we couldn't even test it.
Hmm.
Which, if you guys always keep on hearing, it's a lower high, and what's a lower high? It's definitely not bullish. So, um, I've been especially, I'm a bull trader. JP's a bear trader, but
Yeah.
when it comes to being a bull trader, that doesn't mean you just buy everything right now. You don't be an idiot. You just need to know where the opportunities lay. And in the past 2 months, if you look at the stock heat map, if you look at websites that JP talk about, which we talked about previously, which is Finviz, where you go to the group section and you look at how which sector is performing, how it's performing. You could kind of see, technology used to be a huge gainer like 3 months ago, but then heading on to the most recent months, you could it's been losing a little bit of steam, and we see, yes, you can look at Nvidia for example and be like, hey, Nvidia is bullish, so what do you mean you're bearish? But I mean, is this, as a person who studied price for 11 years, I am telling you this price action is not like a healthy price action to the upside. This is just people, just being toxically pushing Nvidia to the upside. And if you guys don't know, a lot of other foreign central banks, like let's say for example, I think like the Swedish foreign central banks, like they are heavily invested in the stock market. So they just keep on pumping money into it. So when they have heavy positions in, let's say, the S&P 500 or SPY or Nvidia, they just keep on pushing money into it. So you're gonna have these very weird trajectories, right? Because I can tell you, looking at this, there's only one bull flag that is on this entire chart, and it's right over here, and that's it. And ever since October, early October, there's not one valid bull flag. You could say maybe this, but this itself is like completely ugly. So yeah, I mean, as JP was saying, and I'm so sorry to cut you off, JP. Like Nasdaq is not looking bullish. I'm not saying it's gonna have a catastrophic dump, but I personally, like, that's why if you guys have seen my swing trades, uh, I've not been really focusing more on the tech side, and it's for a reason, right? Because I don't see much upside for tech until we have a little bit of a retracement, whether you want to look at fibs or whether you don't want to look at fibs. The general idea is I personally want to wait till we actually get a good setup versus not a good setup. But you said you wanted to look at
SPX,
SPX.
the
Okay,
actual
so
index rate.
this is
That's
the
not.
this is the which one is it? This
It's,
one?
yeah.
Okay. All right.
Remember,
So
the index don't have volume, so.
okay. All right. But yeah. Your thoughts on this, JP? I mean,
S&P.
so
I mean, I'm. This is. I've
this
been
is like
bearish
a
on the
bull flag,
S&P.
right?
I've been bearish on the S&P. I have a level that I wanted to reclaim before I even considered taking a long, and it's down here at 50. It's I'll tell you exactly what the level is that I have on the S&P before it bounces. It's 5702.83.
5702. Why am I being so dumb right now? Wait, what? What's the number?
Just put 5700
It's
on the S&P.
5,700.
Yeah.
Oh, okay. All right.
This is the number that this is where I really wanted to try to get to before I even consider looking at any bullish sentiment. And that's a combination of two things. Number one, that's the bottom of a gap that needs to get filled, and that's also the it's the 50-day simple moving average on the daily.
Ah, okay.
Yeah.
I see
So
where you're going with it.
a breaking close below the 50 has a full swing of bearish sentiment to the downside, and then it just becomes, you know, now this is where being a fib trader really works out. And Kevin, if you can draw a fib on the S&P right now, you'll see. Yep, there you go. It's not rocket science. If you break below that 5,700, there's realistically nothing stopping you from that 5,600 or that 50. I believe the next level that I had was 56. Uh,
It's close because the
55,
fibs.
55.98, 55,
Oh,
98.
okay.
That
Yeah,
would be the next
that's yeah.
55.98. And then it just becomes one of those things, can we have that big of a move to the downside? Well, why can't we? You know what I mean? It's possible. So yeah, I mean, I want to let this settle in and see how we act around the 50-day simple moving average before I make any decisions.
Yeah, I mean, I have a level almost close to where you would say, and it's the easiest way is just seeing where the recent strongest high is, and that's all the way at 671. So it's just a few points below where you were looking at, and I
Yeah.
think you break below the 700 level you're talking about. It really depends on how you bounce off of here, because if you bounce off of this strong, then
Yeah.
you
Oh
could
yeah, then it's
potentially.
fine.
But then let's say if you bounce
Or
weak,
a little bit weak, and then that becomes that right shoulder.
yeah, exactly.
Yeah.
So
That's
yeah,
For people that don't know, that's the head and shoulders right there, just in case you guys don't know what that is.
yeah. So it's definitely interesting to see what the S&P 500 does. Um, I think
And last but not
compare.
least, the Dow. That's the last one. DJI.
What's DJI?
You're a Dow trader, so you would know this.
Yeah.
Look at that, right there. It's getting right there. That 41,494. I mean, if it that just it's a couple more points, and then if it can hold that, it's reclaiming that high.
Yeah, I think honestly, out of the three indexes that you want to go over, Dow definitely has the better setup. Just
Hmm.
because one, it's the one that made actually a recent new high, and the fact that the price upwards to this point is not ugly. Yes, we did have consolidation over here, but you could see there's a lot of strength here to the upside. So maybe we might have a little downward movement in the near future, but I think we could possibly, uh, you know, what's it called? Rally to the upside. And the biggest, one of the bigger holdings in the Dow is Home Depot, and Home Depot is one of my favorite stocks to trade options because when you swing options on Home Depot, they move like very nicely. Um, and the unfortunate thing is, Home Depot has a bit of a bearish trajectory here, but it really depends on how it reacts to this 391.10 level. If we bounce off of here, this can easily become, as we talked in previous live sessions, you can always look at the line chart for a more simplified approach. JP's been an advocate for it. But if you look at the line chart and we bounce off of this previous high, this can actually become bull flag, falling wedge, whatever you want to call it, for Home Depot. So it's very interesting. Price indicates, at least in the recent candle, that there's a little bit more downside. So probably instead of testing this recent high, we can test this general area right here, and eventually bounce off of somewhere around this area. And this would also help the Dow, to the upside. What else is it heavy in, the Dow?
The
JP?
Dow 30.
No.
Oh,
What's
geez.
holding?
Oh, what it's holding. I mean, Intel was in it, Apple, Amazon, Microsoft, Coca-Cola, Chevron, Exxon, Nike, Disney, JP Morgan.
Oh, okay, so yeah,
I
it's
mean,
a bunch.
yeah.
Yeah.
Yeah, but I mean, if you want to see something that everybody's talking about, and I know that someone just asked about it, and I don't mean to skip whoever asked the first question, but look at BA,
Yep.
monster, this stupid company that's ruining my life.
No, I mean I have shares on BA as well in my long term. But yeah, since you wanted to bring it up, is there anything you want to say about it?
No, I don't want to talk about BA. I hate airplanes.
All right, well I'll talk about BA. BA's been just look at this. It's just been downward trajectory ever since December 21st all the way last year, and rightfully so, because I don't know what kind of company, before would just put cheap products and on such an important thing. You could say whatever you want, but about BA, but in the end, JP has been an advocate of this. So have I. BA is an American company, and American companies, they always somehow find a bailout and bailout or some help, or they just end up doing well eventually. So you see, we came here to a previous demand zone for BA, especially on the bigger time frames like the weekly and the daily. And we've had a lot of consolidation up to this point, and we had a very strong bounce, and then earnings happened. And earnings, they beat on revenue, not that much. Maybe JP, you can add on to that, but it didn't have such a, even though it didn't do great on earnings, it didn't have much of a downside trajectory to it.
They're
Yeah.
just there's a technical level that's being held by institutional traders at 145, I believe it is, and then 142 is like their max pain, where they're either gonna just release the hounds, or they're gonna just buy it up. And by releasing the hounds, I mean they just say whatever, just kill it. But all of this has to do with a combination of obviously faulty airplane parts, and this union strike. It's just killing the company's revenue stream. And obviously, if they're not making planes, what are they going to make? You know what I mean? Aluminum foil hats for me and my conspiracies. What are they going to do? So yeah, I mean, until this gets resolved, I last time I checked, and to be quite honest, I hate to say it, I gave up on BA, on even reading the news, because it's just depressing me. I think that they reached an agreement with the
Yeah.
union.
Let's do this.
Yeah, I think if I'm not mistaken, they reached an agreement uh, over what the numbers would be, but nothing has been put on paper yet, or signed. I might be mistaken. If someone has better information on that, then that'd be great.
I know. Yeah, there was like some deal proposed or something.
Yeah, there was a deal
Yeah.
proposed that would make the union workers happier, but again, who knows when I really would have to read up on it just to see what's really been going on, because I just honestly, it just gets to a point where you're watching a company and you think that you have a good trade on, and it just keeps going against you, and you just say, you know what, I'm not even going to look at it anymore.
Yeah, but there's a thing in when it comes to markets, especially with stocks that are used to be very well known and still is well known here with BA, and it's always where there's the initial hype, right? And I'll show you what I mean. There's initial hype in the stock, right? And you could see that it had its huge rally up, and eventually it starts having the sell off. And once it reaches a point where it gives a fake, rally, it ends up being rejecting again, which it did, and it reaches a point where the volatility is so low that people end up giving up on it, and that's when institutions start piling in
But
and yep
yeah,
and buying it, and it's very funny how it works. And this is around, that's why like I bought shares for it, one because of obviously the possibility in the double bottom, which it technically did. It's not as strong, but it somewhat did. And also the fact that it's reached a point, as JP said, you kind of want to just look away from it because you're like, oh, when's this gonna move, right? And it's not moving. So I have that, like, hey, if I buy shares, I don't have theta, so eventually there might be some upside. And hey, if you do get upside, if you do break above, I know this is a pretty high level, but if you do break above 192, 250, all these price ranges are pretty easy to reach. But you first have to eventually get over the support turn into resistance level, which is once around the 163.78 or 164 area. If you get above here, then I would be bullish. I would personally be bullish on BA. And the way we've always talked about the Elliott impulse waves, the first impulse wave is usually triggered by institutional buyers. It's not the strongest, but it is a rally. Usually breaks above a significant level that you'd want it to break for it to have the sentiment of bullish. Then you have a retracement, and then on this retracement, you'd want to typically see the stock bounce off of a level that's important. Usually, it's the level it broke out of before, and then once it bounces off of this is now categorized as a confirmed support, and the 2 to 3 wave, or the second impulse wave, is the strongest wave because this is when retail traders and institutions push up the stock. So this would be my personal bull case for BA. This is what I would want. That's why I personally have shares on it. I see exactly why JP was looking at shares a while back, because I know he pointed out around this area, and you could see the heartbreak that poor JP had to face, this entire time, having his hopes,
yeah, it's just so nasty.
yeah,
It's so bad because you know what it is. I
yeah,
had it at. Can you make that? Can you zoom in a little bit more into the candles? Because look, I had it. I can even tell you where I had it. So I
yeah.
started adding. No, no, go back to the left. To the left. Go further back. Go. I added at 163.
163
At 163, and then yeah, but you gotta go back further when we had that initial pump.
here.
I had 163 and I rode that wave and I'm like, it's gonna go to 200. Then it broke down. I got stopped out at break even. Then I saw that stupid that what I thought was a reversal candle, where your white candle, the other one to the right, the other to the right. Yeah, I thought there we go. We put in the bottom. Then I went long, and then of course it rejected there, and it came down, and I held, and it came down. It kept coming down. Then I got stopped out. Then it bounced. I filled, rejected trend line, gap down. I sold, and I tried buying again, and I got screwed, and then I just gave up.
Yeah, sounds like a very beautiful story, JP. I can see why you're
That's
giving up on BA.
literally what
Yeah.
happened to me. Because every
Uh,
time it kept hitting that, I thought it was going to break that trend line. Because you can see that there's a trend line inside of a trend line. Do you see
yep.
that?
Yep. Right
Yeah.
here.
There it is. Yeah, exactly. So I kept playing that trend line. I'm like, it's gonna go. It's gonna go. It has to go, right? And it never did anything. Just kept smacking me, bro. Look at that. Look at how well it rejected off. If anybody who tells me that trend lines and levels don't work, this is a perfect example. Trend line rejection, trend line rejection, trend line rejection, trend line rejection. Like, how many times did I want to play that trend line rejection? You know what I mean? Jesus.
Yep. It's a very beautiful chart to look at, right?
Yeah.
Yeah. Um. All right. I guess we're gonna move on to since we got into BA, we're gonna
There's
move on to
192 on it, by the way.
huh?
You have 192 on it. Upside potential is 192.
Oh yeah. I mean
Yeah.
that's what I'm aiming for my shares. I'm probably gonna wait till it creates the first wave. You know, take off some of my position, add once it comes down to probably this level. I think this is the important level here, 163.58 or whatever. You know,
Yeah,
I don't.
160, yeah, 165 is what I have.
Yeah, and it breaks above that and comes down, bounce off of that. Like that's a good. That I
It's
personally
over.
will get into options and also shares add on to it. So yeah. All right. So we're gonna get into the tickers you guys requested. Again, you could ask. You could put it in the Ask Us channel because we don't look. I personally don't look at any other channel but that. Um. We got a request for Dell. Uh. On. Whoa, I have so much on Dell. Let's see. You said you wanted the 5 minute. Let's see what on Wednesday. Let's see. What date was Wednesday?
Oh, I know what they're looking at. I know what they're
30th.
looking at. I know
So
exactly.
yeah, should I enter? Yeah, so
He's trying to
go
break.
ahead.
He's trying to catch that breakout. You see that? That
This one?
reclaim of that 132. No, no,
Okay.
go to the right. You're on the wrong date.
This is 30th. Wednesday.
Oh, he's asking for Wednesday. I thought he was asking
Yeah.
about the current. Right. Okay. Sorry. Go ahead.
Yeah, so actually for the person who asked that question, if you can actually like give a little bit more details and I'll come back to what you were trying to catch the downtrend, okay? Off of what fib? Here, do this. Send a little like a picture of what you're looking at, and then I can be able to answer that. In the meantime, I'll get into the other tickers just so we can be a little bit more efficient on time. So we requested CRSP, and it's funny because actually the
CRISPR.
prior, huh?
CRISPR.
Yeah, if you actually remember, JP, we were asked about this.
Yep. We were there, and that guy took that trade, and he probably is a gazillionaire. That's why he's not here.
Hey, I actually got in those calls as well. Okay, all right, and actually, when did I get in these calls? Oh, I think it was here. No, wait. Yeah, it was here. I got into. Wait, no. Hold on. When did we. Hold on. I'm sorry. I need to figure this out. I need to know when exactly I got in CRSP. It's the same. No, it's not the same guy you asked. But, yeah, basically, I got into calls. There was a rally up. But my whole thought about this is, it's a very beat down stock. It's therapeutic, so it's a little bit risky because you guys already know pharmacy always has the risk to the news that just comes out of nowheres and just takes all your shekels and balls, right? But basically here, you got trend lines, whichever way you want to put it. There's no perfect one. This was the one I was looking at, and I believe I probably entered somewhere around here on the CRSP calls, and it did pretty well. But you could see it had like this downtrend, and it bounces off of it, and then rejects, and then it had this really great Friday, probably because earnings are on Monday. So obviously, very simple. Since it's been a very rangy stock for the past 2 years. If it does pretty well on earnings, especially since it has created, if you guys actually can eye it over here, it's created a higher low. So this is a little bit bullish to start off with. So if it does have a good earnings, unlike the other past two earnings, you could possibly sorry you could wow, I can't speak. You could possibly look at it to break the previous high eventually. When I look at fibs, I personally like only looking at the important levels in my perspective, which is the 61 and the 78 percentile. So you could eventually test the 61 percentile if you do really well on earnings, and you'd create then again the first impulse wave. You'd wait for retracement, enter. You'd want to break the previous high, which is $90, and then you could really see some really great movement here on CRSP all the way to prior highs. But again, this is a pharmaceutical stock, right? So how many times do you actually see that happening? It's a little bit rare. I guess you would say is the right way to put it. Your personal thoughts on it, JP?
I am not a big fan of trading CRSP. I feel like we missed the trade, but
Yeah.
now it looks like it's set up again. I kind of don't want to be in a situation where I feel like I didn't get the initial move that I wanted. So I'm just gonna wait to see how it reacts around this. I want to see if we come back to this $39 price range, and if it goes back down to 39, I would be a buyer. If it can hold that 39, I would be looking to buy. That would be my trade. Right now, I just I don't like trading. I don't want to be in it right now where it's at.
Yeah, no, absolutely. I agree with you. Like, if you're, if okay, if I was looking at this in a similar standpoint as JP, right? Whether it's shares or options, options is obviously a lot more riskier because of the whole earnings coming up and possible IV crush. But if I'm technically not already in it, I'm not gonna be taking a new position because then I'm just trying to get in. I'm just feeding into FOMO, right? The bull setup was when I got into calls. There was a little bit another chance you could get in, but it wasn't a great one. So now, if you're really hell bent on getting into CRSP, for instance, and it does really well on earnings, then you'd want to wait for. I would personally wait for it to have a rally, to have a pullback into a good level, and then watch it bounce off of that, and then possibly getting into calls or shares at that point. That's what I look at, and like you could see here, this basically depicts the revenue for any stock you want to look at. If you ever want to pull that up, all you gotta do is type in total revenue, and then you could see here's this indicator, and you could choose if you want to look at the revenue for quarterly, annual. I don't know what TTM stands for, but you could see here you'll see a lot of pharmaceutical stocks. It's gonna have very inconsistent earnings or inconsistent revenue. Sorry, so it's very risky to technically trade these unless you have a good entry, like which is around this area of $44, or you have some insider info, which I'm pretty sure 99% of us do not have. So yeah, that's just my thoughts on CRSP. We're gonna move over to V because V was asked, which is Visa, one of my personal favorite swing stocks. JP, you know a lot more about financials. Any thoughts on this before I give my personal thoughts?
I personally am not trading anything that has to do with because I do believe that it's a huge
You cut off. What
front.
did you say?
I said I'm not personally looking at trading anything inside of the credit card sector or any type of lenders because I am seeing an uptick in the amount of delinquencies on the 30, 60, and 90 days for credit card payments. And even though they're having good earnings because they are making a lot of money on interest, I think that there's going to be a situation where the consumer's just going to stop paying their credit cards because they're going to have to decide between eating or paying their debt. And I kind of want to stay away from it. I mean, the chart, in my opinion, Visa is always bullish because credit cards are not going anywhere. But again, since we are in these very weird times, I wouldn't be surprised if consumer credit starts to become an issue for people, and it starts to become like a wink, wink, DMBC, or as I like to call it, the Clown Show Network, um, a subject matter, if that makes any
Oh my
sense.
goodness.
So
Yeah.
I'm bearish on the my overall sentiment on credit cards or lenders is bearish.
Yeah, I mean, I could see why you're saying that. I remember like a year ago you were talking about, or a few months ago you were talking about, the uptick in delinquencies as you were talking about. Another thing is, there's a bunch of car repos that's been going around,
Car
because,
repos are going up. The
yeah,
car repossessions are going up, and car delinquencies are going up.
yeah.
So I just don't want to be in it. And also, to be quite honest, I think there's a lot of broke college kids, and they're not paying their credit cards.
Oh, I
So
can definitely attest to that. I'm in college right now, and I can tell you for a fact a lot of the students here do not use debit cards. They straight up use credit cards, and They end up unfortunately seeing my trading account when I'm in my room or when I'm in class and like, hey, can I borrow some money? So, like, that's definitely true. But tying into what you're saying, you look at the weekly chart here, JP. You could see, like this is not a bullish. This is not technically the greatest bullish candle you can have.
No, that's a big wick. That big wick
Yep.
from the top. I don't like that long wick.
Yeah, we don't like that long wick, do we, JP? So,
I don't
uh,
like the way you said that.
yeah, yeah, yeah. But for previous talks we've had, I've always say I'm a huge price trader, and I think people have it very wrong when it comes to price action. They always focus on the bodies. I personally think the thing I've been successful by focusing on the wicks, and the wicks always tell a greater story than the body, huh?
No, go ahead.
Yeah, the wicks always give a greater story than the body, and uh, and it's always important to make sense and make a story of what's going on in the market because then it makes a lot more, it becomes a lot more understandable for you, and you could create a lot better, or at least I've been able to create a lot better trading plans once I was able to understand what's going on in front of me. And what this shows to me, tying in with whatever JP said about not whatever, but what he said about the delinquencies and everything, and the broke college students. Even though he said it, jokefully, it's the truth, right? A lot of people are not, doing well in finances, and this wick also shows that even though it did really well on, did it do really well or did it just do good? Whoops, it did really well on earnings, but even though that's the case, yes, we do have a weak bull flag here on the daily. The wick on the weekly just shows that, hey, yes, there might be some upside, but there is a lot of aggressive selling over here, which indicates, we might have an uptick Monday, or early next week, but we could possibly see some downside. Not saying it's going to go all the way down to like the 250 levels or even lower, but yeah, I personally would not be bullish on Visa as well. I saw this bull setup actually here on Friday, and I did want to get in it, but at the same time, like this is not, like you guys know me, I love bull flags, but like this is not a strong bull flag over here. You got these enormous wicks on Thursday and Wednesday, so that kind of shows the story there on Visa. But anything to add before I move on, JP, about Visa or no?
No, not about Visa, but if anyone is looking at an interesting chart inside of this space, look at Discovery Financial, which is DFS.
Oh, I love that. Yep.
And
DFS is stronger.
the only reason I say Discovery Financial is because Discovery Financial, believe it or not, is the biggest lender of student credit cards.
Absolutely.
Okay.
Yep.
And their target is college kids. And if you look at their last earnings, they already reported earnings, but you can
Yep.
see, yeah, you can click on it. Look at by how much they they beat. They beat by 2.39%, right? So let's just say two and a quarter. Go look at the earnings report and see where where their profit margins came from. Their profit margins came from new credit card applications and the higher APR that they're charging.
Mm-hmm.
Excuse me. So of course, if you got a kid that's getting charged 29.99% APR per transaction that he's making, and he buys a pair of shoes for $100, well, there you go. That's how they're making their money. So
Yeah,
it is what it is.
my first credit card was actually with Discover because they give like this they have this thing I believe when I first started where if you get a credit card from them, you don't have to pay interest for I think like 15 months or
Yeah, it's
something.
15 months. They
Yeah,
do. That's the way they catch you.
they do. And hey, they do. They'll keep increasing your credit limit without even asking them, and they'll just keep
Yep.
on increasing. And hey, for a second 15 months hit, that credit card has one of the highest interest rates you can have
Do
out
you
there.
remember? Do you remember a couple of months ago I called you and I said, "Huh, look at this. They just raised my credit card limit."
Yep.
And this was when they were talking about how consumers are getting tighter, at the house and blah 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 blah.
Yep.
And they, I have a, I have a substantially large credit limit on this credit card, right? And let's just say they raised it $30,000 more.
Yeah, okay. That's
Yeah, yeah, literally $30,000 more. And
you
they did
see.
that through a period of 8 months. So I was getting a credit limit increase, and I wasn't even requesting it. They were just giving it to me. And now I'm sitting here. I'm like, I don't need that much credit on this card, but hey, you know what? I ain't complaining.
Yeah, no, absolutely. It's funny because the past year or so, you see obviously inflation, you see people not, the increase or whatever in the unemployment and people not having jobs. And, you constantly hear people like they won't even pay off their full balance and then they still end up getting the credit limit increase. I know like a friend of mine, he had a $4,500 credit limit. He had a 4,200 no $4,350 balance, meaning he had only $150 left, and they increased his credit limit from 4,500 to 7,500. For,
Beautiful.
for, that dude still has only $150 left on his freaking what's it called, his
Limit.
credit limit. Yeah, and they gave him the thing, and he's not even working. He's not. He's a college student. It's just crazy. Like, they raise these credit limits not because they want to help you. No, they raise it to trap you, and you could kind of see it. It ties into everything JP is saying. Like, how consistently are people going to be able to pay their credit cards when they're not having jobs? The DFS college students, main people that are focusing. Like I go to Hofstra, Long Island. Hofstra is an expensive school. It's like 75K per year.
That's
So
where
we're
Tom's son graduated from, by the way.
Oh, really? Okay, that's actually kind of cool. And yeah, it's a very expensive school, and these kids like they're very spoiled, and so, they don't have any concept of having a job, and a lot of them actually have falling outs with their parents, and then they sit there and they're like, oh shit, I have no job, I have no money, and I have a huge credit card balance, and I know people in my classes who actually do not pay their credit cards, and they think they're okay because they got no money. They're just gonna like file for bankruptcy or something. And this we're lived in a very we live in a world where people want to avoid problems, and the first thing that's gonna get hit by this, at least in my opinion, just like JP thinks, is gonna be the credit card industry. So yeah, thanks on your perspective on that, JP. But yeah, we're gonna move on to KO, since that's the next requested one, and eventually we'll get into all the other ones you guys requested. Before I get into KO, any personal thoughts, since this is an old person stock and you're old, JP?
Oh, thanks. No, no, no.
No?
Another company that I owned at 57 and I sold at 60, and I don't want to talk about it.
Oh no. Okay, all right. Well, I think for me, KO, option standpoint, and even share standpoint, I'm not gonna really touch it until it comes a little bit down to this area over here, which was like somewhat of the previous high before the breakout. And then we'll see how it reacts over here. If it creates some consolidation, that would be healthy in my opinion. I'd rather wait for a consolidation instead of just a bounce straight up, because if it bounces, that doesn't necessarily mean that the upside will continue, right? So what I personally would favor is if it has a small bounce, it kind of consolidates here, creates some support within this range, right? Because there's also a fib level, and then eventually you can have some upside. Is there any correlation between poor financial times and the uptick of Coca-Cola, or am I just
I
grasping at
actually don't.
straws?
I don't know if there is, but we all know that in times of crisis, people flee to dividend. And if I'm not mistaken, doesn't Coca-Cola pay a pretty decent dividend?
Hold on. What does this mean? You tell me.
I
Does it
can't.
pay
I
good?
don't even know.
Are you looking at my stream?
Yeah, I'm looking at your screen, but it's in your screen to me. It's black. I'm not seeing anything. Can you type on Coca-Cola again?
Wait, can you guys actually not see the
No, I think it's just me. Let me.
ed- okay, because
Okay,
it's
I
on.
can see it. Yeah, there we go.
Oh,
There we go.
okay.
There we go. Yeah,
All right, all
I
right.
think.
Yeah.
So its dividend yield it's 2% actually, 2.93%. That's a decent yield.
Yeah.
So
Okay.
yeah,
All right. So yeah, Coca-Cola. That's pretty much my standpoint. I'm not gonna be trading until it comes down to this area, and I want to see how it bounces and reacts to that. The next ticker is SMCI. Do you guys probably know oofy oof on this, right? There was what was the news on this, JP? That caused the let me check
Federally
see right here.
indicted, investigation by the Justice Department. There's just a bunch of stuff on it. It's just a ongoing catastrophe.
Gotcha. Well, yeah, I'm personally not touching SMCI. I'd rather wait for consolidation. I don't care even if it, where the news comes out where they're like, oh, SMCI is great and it just rallies like 20%. I don't care. I personally know people who bought shares, or bought equity on SMCI at this high
And
level
are
over here at
screwed.
445 and they got screwed. And the reason I'm not getting into this is because it's just too much uncertain risk. We never know when news is going to come out. You don't want to really pay attention to any possible inside information. It's just like you don't know. I'd rather just wait for confirmation. That's just my standpoint as SMCI. It's just too risky to gamble anything, and I'm not into gambling. So, yeah, it's a pretty quick thought here on SMCI. So going back to the Dell thing that the person was asking. So let's see. We go back to Wednesday, and let me see what they're looking at. So you drew a fib from here all the way to low, and you extended it. This is not how I would draw a fib. If you're trying to, so I'm just so I could go, cover bases on what you were trying to do. When you're looking at drawing fibs, you don't want to make it too complicated to yourself, right? There's two concepts you want to know. There's a bullish fib and there's a bearish fib. When you're drawing a bullish fib, you just basically draw from the lowest low of what you're looking at and to the highest high. And when you're drawing the bearish fib, you're drawing from the highest high to the lowest low. And that's like the starting points, right? So I'll just make it very simple and I'll draw it out for you. If you're doing a bullish fib, you start from the lowest low to the highest high from whatever standpoint you're looking at. And then if you're drawing the bearish fib, you draw from the highest high to the lowest low, from wherever you're looking. In this case, I'll pull up the picture here so you guys can also look what he was looking at. This is technically not how I draw my fibs. Like this, when you're day trading, you can't necessarily go based off of an old fib, right? So for instance, let's just go according to the fib you drew. You're looking more at the fib that was created from the beginning of the day, right? Why am I just adjusting this? Let me redraw this. You're looking at, from the high, from the open all the way to the low of, when was this? 15 minutes into market open? Yeah, so from 9:30 Eastern to 9:40 Eastern, and you're looking at the fib like this, you have to realize that this is a bearish fib, but this is only valid until it breaks above, and it broke above, right? So you don't necessarily want to always look at this. This doesn't mean that it won't work out, but the reason why, let's say if you entered puts over here at this rejection, the reason it worked out is not because this is a fib level. The reason it worked out is because this was, market open. This is where it opened and then rejected at open, so that's why it rejected over here. So that's technically, you wouldn't want to trade the downtrend off of that. If you wanted to trade a downtrend, if you wanted to look at a bearish fib on this, it's kind of tricky, but I mean, you can't really draw one because the upside was so big. But let's say you drew it from here to this bottom over here, and you bring up the 38 fib. I think, no, I didn't even touch that. So probably the only one you would go off of was the 23, and that's where you rejected off of. But I personally don't like having the 23 because a lot of times this area is invalidated. So would this be the best use of the fib? Personally, in my opinion, no. When you have a strong rally to the upside, you want to go with the trends. So the best case scenario here would be for the bullish fib, because there was more of an upwards momentum than a downwards momentum. And you could see here, like, there was just no real, in my opinion, there's no real usage of the fib. I personally, the only thing that you could have looked at for puts is the fact that the price came and retested. You had a sharp trajectory to the downside, right? So this shows the change in trend. So then you never want to be stuck chasing something. So the smart thing is to wait for it to break below a previous support or resistance, right? And it break below it, and you'd wait for it to test that, and you see it rejecting. Then a good put entry would be it after it rejected the second time or the first time at this level, and that's how I personally would trade that. So hopefully that somewhat gave you the answer of how I would trade it, because I can't necessarily say, hey, you're doing this wrong and you're doing that right, because I'm not a financial advisor. I could just only tell you what I personally would do in this situation. So that's what I would do. But going into the next question here, which is uh, when you're looking for swings, what is the first thing you look at? Bullish, bearish, chart patterns on daily and high volume, etc. And this actually ties into the next question we have, which is for me, I was asked, you're not looking at the market all day long. How did you find the swing idea out of the thousand stocks? And to JP, you have a massive watch list. How do you manage it? And do you go over them every day? JP, I'm actually going to ask you to answer this question, and I'm going to add on to it just because I need to take a sip of water. But talk about how you look at swing trades, because everyone here knows that you have a very big watch list. But you can actually, yeah, how do you go about finding your swing trades?
I actually reverse engineer the entire situation by going into my S&P tactical watch list, which is something that I've shared with people before, and I like to look at what sector is leading the way. Whenever I see what sector is leading the way, then I go into the heaviest weighted stock that that sector particularly owns, and I like to see if there's a swing set up in that sector and in that company. If I company's on my watch list, then I'll look for the trade because I normally will look for momentum after a bounce or break above a major moving average. That's what I'm looking for. I like to look at stuff that has, you know, as I am an SMA and an EMA trader, I do like to look at stuff that has the bullish crosses, like the 9 crossing the 21 on the daily, a strong bounce off the 10 or the 20 SMA, a nice golden cross off the 5200 on the SMAs or the EMAs. That's how I practice on my swings. I also use, when I'm looking for swing trades, I incorporate MACD because I like to see where MACD is when it comes to the possibility of getting, again, the moving average conversion divergence cross, which is showing me that it's going to continue either to the up or to the downside, and then I target the major moving averages. So that's how I look for swings. And by major, I mean major dailies. Kevin?
Oh, sorry, my mic was off. So JP, if you actually don't mind, because I actually get messages asking for your S&P watch list, would you mind actually sharing it in the Ask
Sure.
Us thing?
I'll put it in right now. Do
Yeah.
you mean the tactical one that I utilize
Just
for sectors?
yeah, just put like the two watch lists you use the most or something. Because I put mine, people could refer to that, and then they could also refer to
I'll put
yours
it
as
in the
well.
chat as soon as I figure out how to share it. So
Yeah, I knew it would be hard for you, so I'll show you right here. So, go, once you pull up this watch list thing,
uh,
just press on the drawdown.
uh,
Make sure
got
this
it.
is checked. Yep, okay, right.
Yeah, got it.
So for me, my watch list is just comprised of stocks that I've majority traded over the decade and 1 year that I've been here trading, and it's just this, it's just stocks that have good option chains and good option movement. And for me, I try to. I'm a very dumb guy. I'm not really as smart as JP. So JP can process a lot of information, look at a lot of things, but I'm just Kevin. I'm dumb, man. So I keep it I try to keep it simple. I just have this watch list. I go through it on the daily. I literally like, this is literally me. At 3 o'clock. 1 hour before close. You guys always see me, posting like 10 minutes before close and stuff like that. I'm literally just going. I'm just going down the whole watch list, just seeing if I see some bull flag or bounce off a level that I like, and I'm just eyeing it. Right. I like having the full screen here. And I'm looking at multiple factors. I'm looking at how is price consolidating, right? How is the volume looking on the bottom? I'm also a huge user of VRVP. So where is price relative to VRVP? where the stock is. Did I have a huge, down run? Like eBay, for example. eBay is a stock that I had like 4,000% in options. If you guys remember the calls that I got all the way in the start of the rally, all the way down here. Like I'm looking at eBay again because I want eBay to come down to a prior support and see how it reacts to that. So this ties in similar to what we talked about, a few weeks ago, or I think last week, or actually 2 weeks ago. And it's JP's a big advocate of this. You always want to draw your own levels. You always want to take time and looking at charts and looking at areas that you find
Yep.
interesting or areas of interest, because when you do that, when you're scrolling through this watch list like a dumb
You
person like
own the
me,
chart at that
you
point.
own
You own.
exactly. Exactly. JP says it perfectly. You own it, right? And you don't need to be looking at, Intel. Oh, I gotta scroll that. No, you literally scroll through it. 15 seconds, you look at it. Hey, I don't like it. All right, it's not where I want it to be. Hey, it's not a level that I don't want it to be or I like it to be. Then you make these quick decisions, right? So that's why, like, I have a big watch list, not as big as JP's, but size doesn't matter, right? I go through this and I'm just looking for something that I like. And, I have all these levels. I don't have a million levels, but I have levels that I find interesting. And if it's not near levels that I find interesting, if I find a pattern that I find interesting, or I see a unusual volume uptick happening for a relatively weak candle, then I'm gonna pay attention to that. Like, so for instance, like Shopify might be something interesting to look at because we got several things to that I could spot, in my eye, and maybe you might not spot them because you're still getting a hang of trading. But I'll tell you outright, right? Like, you got a trend line over here, you got a little bit of consolidation, you're reaching a prior level, which is 76.20. You could see here on the VRVP, you got a shelf, and you could see there's a declining shelf, right? Which means that if it were to bounce, there's not so much resistance. So if it were to have a strong bounce, this has a lot of potential upside, and then you could be, aiming for this volume gap right over here. Then also additional to that, if you look on the bottom, you see that there's actually a jump in volume on Friday. And yes, usually stocks do have an uptick in volume on Fridays, but you could see, hey, there's high volume on a Friday, high volume on this particular day. And even though there's high volume, the candle's insignificant, which means that there's possibly a big move coming up, right? And you're thinking, okay, if it's a big move, what's the most probable outcome? Well, looking at this, if the previous candle on Thursday was a bearish candle, but again, it had a decent wick to the downside, and then Friday opens up with an in-bar candle, whatever the proper term is, because my English sucks. You have a candle that opens up within the previous candle, and it has a wick to the downside and a wick to the upside, but it's still not completely bearish. I'm saying my probabilities are it's going to be a bullish setup and it's going to rally, next week. But of course, we have earnings next, not earnings, but the presidency next week. But that's basically how I look through this. It's just as JP has been a big advocate for, and so have I. If you draw these levels, if you have these plans, you have the weekends, right? You have after hours. You don't need 100 levels. You just need a few. You find one interesting area and you think, okay, if it comes down here, what will I do? If I see consolidation around this area, what will I do? These are questions I ask. I'm not over here. I don't have the mental capacity JP does. I can't understand data that he does. So it's just how both of us look through it. So yeah, I know that
I,
was a
I
long
also
answer.
I also get asked the question of like, oh, how often do you rechart your levels? I rechart my levels every week. I rechart because what I like to do is on Friday I just delete my chart and I rechart everything. Um, and the reason I do that is because I want to feel like I am. I'll write down on a piece of paper like important levels that I see. Right, I have them, and
Right.
then I'll start charting again, and then I'll be like, okay, 58, 5804. It's popped up on my list 7 times. This is an area. You know what I mean? So I like to rechart the S&P and ES and SPY every. I delete them on Friday, rechart Saturday, Sunday night, and then everything that I'm seeing and every stock that I'm seeing. If I see that there's been some fluctuation in volume at certain areas or certain prices, I rechart them again the more you rechart, the more you redraw your levels, the more you confirm your trend lines, the more you get in the habit of doing that regularly, the better you're going to get, and the more you're going to understand what areas and what ranges are important for potential pops in the market. As Kevin will tell you, whenever I trade futures or I trade anything regarding the S&P like SPY, I trade directly off the index, and I always tell everybody I use the index because it's the true gauge of what the market is doing. And every time I say this is a level on the S&P, got to be careful what it's doing there. The futures are maybe below, the futures are perhaps trading in the same direction, but you'll see that, for example, the futures contracts break the 50-day simple moving average, but the S&P is holding the 50-day simple moving average. So the futures traders are ahead of the actual move of the index, and then lo and behold, the S&P bounces off the 50-day simple moving average, and then the futures contracts catch up to the bounce of the actual index. So that's why I like redrawing my levels on the S&P and making sure that they are on point. And like Kevin says, he doesn't draw a lot of levels. I think that I have sometimes too many levels, but each level that I have on my instrument on the particular thing that I'm trading serves a purpose, and I label it.
Yeah, absolutely. Yeah, it's very important that people hear that because I know some people do put genuine a lot of time, but if you don't, it's always great to, you know, in the end, whatever Discord you're in, you're not in it to be a sheep, right? Like, yeah, Kevin could be great at trading, but who cares? Like, what's the point? Eventually, Discord is not going to be something you're going to be on, and what you're going to be having your tail in your hands and thinking, hey, I learned nothing. You don't want to be like that, right? So that's the whole reason we're doing the Saturday tickers thing, right? Because no one's freaking doing free education because everyone's just out to get freaking money. And almost like, without going into any details, almost every Discord server out there is a freaking scam because you don't learn shit. So you always want to make sure you learn it. And hey, if you're not, if the servers you're in don't have education, then at least freaking look at what the people are looking at. You see JP or Kevin getting into calls. Why are they getting into calls, right? And then that'll tie into you actually pushing yourself to learn how to, draw levels. Drawing levels is not that hard to do. Like I've stated it multiple times. I even have a video about it on the YouTube channel, right? You just find an area where there's been a lot of activity. And I always say in the past, you don't levels are not just specific to one price point. It's just an area of interest, right? It's just, hey, where would it possibly bounce? Then where would it possibly reject? So, you put value to these things. You remember, hey, for example, Shopify 7620, if it reaches around that area, I might want to buy calls. It's much easier to do that than, waiting till market opens and then going and drawing your levels based on, all the current price action and everything like that. So hopefully that answers that question. But we're going to move on just because it's already 10:30. Let's see. So I think that's all there is in terms of the tickers. Oh wait, no, there was. So again, it would be really great if you guys, instead of typing it in the live session chat, if you could actually do in the ask us chat, because it's a little bit easier to, answer these questions. JP, there's a question I would like for you to answer, and the question, I'm going to bring up the chart right now. So somebody asked, could you discuss why Google is going down even after beating earnings? And then someone said, can you possibly discuss how to do a strangle to play unexpected earnings? Okay, I'll answer that part, but could you talk about why possibly Google is going down even though it did good on earnings?
I think there's just a big fleet to cash. I mean, it's just a reality of what the economy is doing right now, and what the economic data is telling you. It's telling you that, it seems like there's going to be a problem in the near future. If you look at the bond market, the bond yields they dipped and then they came right back up because people started buying the dip on tech. I think that, you know, it quite possibly could be a lot of people that were buying Google at 144 and 145 that wanted to take profit. I think Google is very undervalued for what it is. I think Google is underweight in a lot of portfolios. It's not sexy like it used to be. I think this is just a healthy pullback before it makes another move to the upside, and that's all it is. I mean, you know, it's good that Google is having a pullback even though it beat earnings. It's good that it's taking a breather because it's just giving more people the opportunity to get back in, and the more liquidity that they can pick up at a key level, the stronger the uproar is going to be. That's all I think it is. I don't think it has anything to do with the company not performing well or not being able to generate money off revenue. I'm sorry, money off ads or anything like that. Or it's. I think this is just a technical pullback on the rejection off a level that we had, and I believe that level was 187. I had a 187 level that I was targeting. I don't know if that's where we rejected. Did we reject off 187?
Nope.
What was it, 181 then, or 183?
Yeah, around that area, 181.
Okay, I had a 187 level that I thought we were going to get to before we rejected, but this is just, I mean, it's just a healthy pullback. That's all it is. Nothing crazy.
Yep.
We also had a down day in the market, and if the S&P and SPY is selling off, Google is in it, it's going to pull back. That's all. That's all it is to me.
Yeah, absolutely. And I think, as JP was saying, I actually was, I like Google. I want to add more shares to it. In fact, I wish I actually got it on Friday itself, but I was just completely swamped. But it's from an investor standpoint, it's fine that Google's going down, because then if you find consolidation here, this is really great, right? Because you fill the gap that it had because of earnings, and on top of that, this is a previous level, right? Support turn into so it was support again, turns to resistance, and now it's support again. So if it holds this, you could eventually test 185 plus, and possibly maybe make new all-time highs. You never know. But this, I'll probably wait for consolidation or some kind of strong bounce for me to enter shares, because then this would become a confirmed support, right? So yeah. But moving on. The next question is let's see. Oh, someone asked about Reddit. I didn't see that. You don't like Reddit, JP?
Uh, yeah. I mean, what do you want me to
I'm
tell you? Another failed attempt of me ignoring a company that I thought was just going to flop and watching it just go parabolic. So.
Yeah, I mean, hey, it's not your fault. It makes sense. But for me personally, for Reddit, I'm not. You could probably like have some like decent or okay swings, but when it's around this area and it's not even coming down and testing this gap up, uh, I don't know. I'm personally not taking it, because you guys can see right here, like this is all just empty space. This is literally all empty space. And let's say there's negative news, for example, for some reason on Reddit, this empty space will become a lot easier for it to just crunch down. It doesn't necessarily mean that this is a bearish sentiment on it for me personally, but I like trading things that have higher probabilities for whatever sentiment I'm going in, and I genuinely like taking calls, and this does not give me any good call setup right now. If I were trading, Reddit, and I really wanted to trade Reddit, I guess I would focus on the 30 minutes and see what kind of trend the 30-minute creates. You could also already see that it's creating a descending channel. So I would personally keep an eye on this and see how it reacts to this. Does it, respect this channel? Does it come all the way down to, 104, which was the open after earnings, right? And how it reacts to here. This would probably be an area where maybe I would take calls based on how price reacts to this area. But then keep in mind, this is obviously risky. So, um, yeah, that's just my 2 cents on Reddit. Okay, somebody asked about my how I trade document. It says I look to always start with a starter position. Do you still do that? I don't see you do average down a lot. The few times you did, I noticed it's a risky wait, hold on, I lost my spot. A risky ad. Could you go over how you do decide your initial position, assuming your full position is 10 cons, and how would you decide should you average down versus a stop loss? Really good question. I think a common question a lot of people have. Since we're on Reddit's chart, I'll just answer this. Let's just say according to using Reddit as the stock that I'm going to take calls on. And then JP can talk about how he sizes, just so you get a perspective on how two different people, how they size. So when it comes to me, the reason I don't average down is because obviously average down is just risky. I mean, I still average down. I always leave room to average down. And that ties into answering one part of your question. And regardless of whatever trade I get into, I don't go into my full position. If we use the scenario which you said, and which is also on my how I trade document, which again you guys can easily are, because a lot of people don't know this. If you go to whichever channel you're looking at my trade ideas in, there's a link that says how I trade. If you click on that, it brings up to this document which talks about how I trade. It doesn't go into strategy, but it talks about sizing, and that's something important that you want to look at or figure out yourself. So let's say for some example, for some reason I want to take Reddit calls, and I want to take the I don't know, 116. I don't know if there's a strike for 116, but I'll take 116 calls. I take my usual size is 10 contracts, right? I'm not going to take 10 contracts. The reason I won't take 10 contracts is, one, I'm swing trading. Swing trading is always open. You open yourself up to the risk of what's the word? Sudden news, right? Or unexpected news. So you always want to leave room for the unexpected. And also, I personally always want to leave room for averaging down, right? Let's say for like an idiot, I just enter off of this candle, even though it's not bullish. Let's say I enter calls on this candle. Let's say instead of taking 10 contracts, I take 4 contracts. If I take 4 contracts, if Reddit does go down, at least if it comes down to an area where I could possibly average down, like 111, then I could enter in 6 contracts. And let's say I enter originally at $1 on those 4 contracts. If the price of the contracts come down to 60 cents, I then can enter 6 contracts at 60 cents. And if Reddit does bounce off of that, you could potentially, the average down profits would outweigh the initial loss on the initial unrealized loss on the initial position, if that makes sense. That's why I size heavier on my average down versus my initial position. That's why I love taking initial positions, and that's why there's a lot of people like there's not a lot of trades where this happens, but for a few trades where like it's red initially and it's down like 40%, and then I average down, and then the contract goes from being down, like let's say according to the initial position, it goes down from being 40% to 20%. But then I post out saying, hey, my position is green, and some people are like so confused, like, wait, how are you green? Well, the simple answer is because my average down is a lot heavier than my initial position. And even if the trade goes my way on the initial position, I am completely okay with walking out with smaller profits versus having my complete position on my first entry, because nobody's perfect. That's my belief, right? And I'm not going to be sizing heavy because that's just a fool's game. Eventually, you're just going to get burnt, and you're going to get burned heavy, and and I'm not gonna stumble onto that. So yes, I do still go relatively small in terms of my initial position. Whenever I don't indicate that I'm going small, then instead of taking like usually I would take 4 contracts, let's say in that example. And if I say I'm going very light, instead of taking 4 contracts, I might take like 3 or 2 in that scenario, right? But that's how that works. That's how I usually do sizing. JP, you want to add anything onto that and how you
I'm the
size?
complete opposite of you. I'll normally take my full position right off my initial trade idea. I don't like averaging down on options because I don't like to I don't day trade options. I mean, I do occasionally, but it's not something that I'm a big fan of. When I take a swing trade, I believe in it, and it either works or it doesn't. Now, If there's a pullback and I have to add to the position, I will, but I cut my losers on swings. If I'm down 25% and the contract is 30 days out, I'll take the L, and then if there's another opportunity to add again, I'll maybe double up on that re-entry into the trade. But I'm not the kind of guy that sits there and takes two, three, or five contracts and then adds 10. I don't have the account for it, and I also don't like being that heavily committed into the position. If I see an opportunity, I take it right off the bat. I set my stop, and if it hits it, hey, the trade went against me. It is what it is. I cut my losers, man. I don't sit around and I don't suffer from hopium anymore.
No, that's really great because in the end of the day, like everyone operates differently, and that's why it's so great that we have not only me speaking but also JP, and that's why I love bringing him on is because he has a different approach to things and it works for him, you know, and that applies to everything, right? Like this ties into the next part of the question that I'll answer, which is the whole like stopping out, like with stop loss and stuff like that. You know, when to average down, when I would exit, and JP said, he doesn't like averaging down, and it's a very valid reason because when you average down, you're adding more risk to a losing position. Then you have to question, why am I having a bad entry, right? Why am I not refining how I enter into trades? And some people either don't have the account size to do that. Some people don't want to put more risk. Some people are more risk adverse. So you always want to figure out what your risk personality is, and that's very easy to figure out. You just have to look at what I would do is I would look at my financial situation, how I am as a person, my characteristics. Do I get jumpy? Do I get anxious? Right? Because in the end, anybody could tell you, hey, you can't have emotions in trading, but how far can you go in limiting yourself, right? There's always like hacks and methods or whatever you want to call it to help yourself, kind of calm down. But in the end, like, there will be moments where your emotion comes up. I'm naturally a very greedy person. That's why I hold runners. That's why I average down. I'm also a very, as you could tell by my voice, I'm a very monotone person. I'm like, as Russell Wilson said, right? He doesn't like being too positive or he doesn't like being too negative. He's just very neutral. He's in the middle, and that's kind of how I am. I'm very neutral. That's how it's so easy for me to, be so nonchalant in a trade. Well, versus some people are very engaged. So you got to figure out how, what you are and how you are, to be able to figure out these questions like, how do I size? When do I stop out, right? Because JP and we could just say and sit here and say, hey, I do this and that, but might necessarily not work for you. So like for me personally, when I get out of a trade, I don't go based on percentages. I don't go based off of the contract being down 20 or 30%. I go based off of, what I'm looking at on the chart. If it's invalidated, then I'll get out, right? But there's definitely risk to that because then I'm opening myself to having a bigger loss on my contracts. The pro to that is I have a less chance of being faked out, right? Because I personally hate the fact. Okay, here's how you look at it. I personally hate the fact that of me being stopped out of a trade and the trade going my way because I like being right. JP's over here. He doesn't like losing money, right?
No.
So both perspectives are right in their own way, and you just got to figure out which way you want to do it. And hey, there might be a different perspective that we don't even look at and might work out for you. So again, for me, it's more like setup. So for example, if I'm looking at Reddit again, going to this whole example, initial entry over here, average down over here. If I see a candle close below the area I'm looking at, then I'm going to exit out of the thing. If I see it, the candle close below a trend line, then I'm exiting out of the trade. That's why I don't like looking at, for example, on swing trades, I don't like looking at the 5 minute or the 15 minute. I like looking at bigger time frames, so then I'm less likely to get stopped out because I don't want 5 minute closing below level, but then the 30 minute actually ends up closing above the level, and then the stock ends up going my way.
Well,
Um,
that's the other
yeah.
reason. That's what you just brought up of a very interesting subject matter here because I think that one of the biggest problems that people have is that they have too many levels or not enough levels sometimes on their trade, and they're like, oh, um, if it breaks here, then it's going to go here and it's going to go here. You should only have your major levels drawn on swing trades. There's a big difference between day trading and swing trading. If you're swing trading, you want to look for weekly levels and incorporate daily levels into it. If you're going to be day trading, then you have to go down to the smaller time frames. So I mean, what are we technically asking here? Like if we're taking the swing trade, you're going to look for, something that's a month out, 2 months, 3 months out, and you're going to be looking for weekly targets, right? So,
Yep.
I mean, if you're in a position and it's a swing and let's say you're bullish and it breaks a weekly level to the downside, I mean, yeah, if it doesn't reclaim it within the next couple of days, cut your loser and that's it.
Absolutely. Yeah. Definitely. There's just always different perspective of what you want to trade. Day trading, swing trading. You always want to make sure you're looking at time frames are very important, right? You look at your swing trading, like JP said, weekly, daily, they're all great time frames. I personally look at the daily, weekly. My favorites, time frames are the 2 hour and 30 minute when it comes to swing trades. But like even sorry, I had a burp, but even if you look at 30 like the 30 minute, you can't just be zoomed in on this small thing. No, you want to zoom out. See, hey, how is price reacting? Are we getting higher highs? Are we getting higher lows? Lower lows, lower highs. Whatever. It's huge, right? And if you need to look at you need to look at everything, because if you don't, then you're going to be squashed, and that applies to both swing trading and day trading. And as JP perfectly said, it doesn't mean you put on like 100 levels, and it doesn't mean that you have no levels. It means that you need to look carefully and think where exactly are the important areas. And if you're trying to get into a trade that's not near an important level, then the question should be, what are you doing? Like, why are you rushing into it? That's my whole perspective. Why am I rushing into something where in an area I don't like? So yeah, hopefully that answers in this 2 hours rant that I and JP had about that question.
And
JP and okay, all right, whatever. You had a question, JP, and it's, do you primarily like going for options or equity for majority of your trades?
equity. Oh,
Yep.
I don't. I mean, I like trading options if I see like a big position. Perfect example, MSOS. I knew that the upside potential was going to pay me out more on the options trade at that immediate moment. But now I'm in shares because I want to I want to be involved in the trade as opposed to just trying to make a quick buck. Um, when I have a pretty weird way of doing things. So let's say that I look at a swing trade and I like to take stuff that's maybe 45 days out, 60 days out. If I am up on the trade, let's say a week or 2 weeks into it, up 30-40%, I'll cut most of that position. I will let the runners run, set them to break even, and then I'll buy equity on the position because I want to be in the trade with the options, but then I want to continue to be in the trade on the share position because I want to ride it for the bigger move. Because if my swing starts going, right, I also want to be in the share side of it all. I think Kevin, you do that as well too, right? Like you'll buy shares and you'll buy options as well, right?
Yeah, that's correct. Yeah, because if the stock has a continued trajectory to the upside, why would you not buy shares, right? Because then
Yeah.
you don't have the con of theta, as you said perfectly. Like some like the MSOS trade, you have the what's it called, the gamma and the delta to help boost your option contracts. So yeah.
Mhm.
Was there anything more you want to say about that question or
Yeah,
no?
that's it.
Yeah. So the next question was more geared towards me, and it's the meta trade I took. So as you guys obviously know, Friday, I call it Meta Friday because I love trading zero DTE metas trades. Again, the only reason why I do trade on zero DTEs is because one, I can risk to trade them, and two, I also know what I'm doing. So just because zero DTEs give you the opportunity to get quote unquote money quickly, it does not mean it's always the best option to do. So you always want to look back and think, why am I, should I really be trading it? Should I not really be trading it? Or how should I size for this and so on, right? But just giving that, 2 cents. But so it's very simple about why I got into meta calls. There's Friday. This is Friday. Okay, so let's see, what time did I get into those meta calls? But before let me just figure out when I got in. I got in at 9:47 a.m. Okay, so it's very simple. When I even day trade, I like looking at bigger time frames because I think it's very important to utilize what the bigger sentiment is. And the bigger sentiment is, yes, it is bearish, but you're approaching a level where it had a double bottom, before, I believe like a week ago, and then you had a previous bounce. If you go to the 15-minute, you'll see it. You had a previous bounce on Thursday, which was obviously the day before Friday. You had a bounce off of the 563.90 area. So that was my whole thought process behind it. Like, okay, this is a confirmed area where it's bounced before. Let me see how price reacts. And that's basically what I did, right? So I waited for Friday to open. I personally don't like trading the first 30 minutes of the market, but I couldn't resist this. So you could see here, going along with my cursor, 47 is when I took the 47 a.m. is when I took the calls. So you can see 40. We had at 9:35 we closed below the level, but then 9:40 we ended up closing above the level, and then 9:45 came, and then you could see we ended up retracing back down to level. And let me just zoom into this second. So you could see around like 9:44, 9:46 we tried coming down to the level again. We bounced off of it, and when I saw this candle over here, I'm like, okay, all right, this is a pretty good candle because you got a nice wick to the downside. So I entered the calls here very simply just because of that. And then you could see this initial run up had gave 90% in profits, and after that we had a small retracement back close to level again. And that's actually, I didn't get to post this because I was in a hotel and I was like getting out of the hotel and there was a whole thing going on. And I was just busy with my wife, and I ended up just adding more to the position, just because I would have taken another set of calls if I would have taken this set of calls if I didn't get in for this set of calls. So I got into the same set of calls again, and the calls ended up going up for 180%. So that's the whole reason why I got into it. It's very simple. It's coming down to an area which it's bounced before. The price action was good. I waited for confirmation. I didn't enter off just because, hey, it bounced off. No, I waited for it to close above. I waited for it to bounce off of it again, and that's when I re-entered. And then for the second scenario, when it came down here, I didn't post about it, but I waited for it to come down to like this consolidation period, waited for it to close above and bounce off of it, and that's when I entered the calls again. But that's why I took the meta calls on Friday. We're going on an impressive streak with meta. I think the past 2 years, I think like it was some crazy number. The past 2 years, it's been 1,800 trades for meta, and I've only had 9 or 12 losses, something like that. I don't remember the number. And then if you guys remember, there used to be like Tesla Friday, and Tesla Friday was, that was so insane when Tesla's price action was great. And I think the record for that in the past 2 years was like 2,800 trades for just like 20 losses or something like that. So yeah, it would have been great to trade. By the way, Tesla does have an interesting setup, by the way, as you can see here on the 2-hour chart. So it's just something to keep an eye on. But anyway, moving on to the other things, to the other questions. Let's see. JP, you might be able to tune into this because I have not really traded this before, but Lucid, any thoughts on that?
I think it's a fake company, and I think it's gonna go to zero.
Okay, yeah, because the guy said, any thoughts on Lucid? Good cars, and they do have some big backers, but they keep bleeding money. So
No, I just don't. I think this is just. I think this is. If you're gonna get in the electric car game, there's only one guy, and it's Elon Musk, and it's Tesla. Anything else is just, to me, you're just hoping and praying. I mean, you can't be. I what is it gonna do? Where is it? Where is it? It's gonna reclaim $5. Like, I just there's so many better trades to be in other than this. I mean, look at that chart. This is just a down and to the right. I mean, this is just ugly.
Um,
You know,
I know you're probably gonna hate me for this, JP. I know you said Tesla's the only one, but the one I keep on buying shares for is Neo. I'm not buying it because I'm stupid, but because, jeez, I can't stop hiccuping. Um, I never was a big fan of Neo, but ever since you guys remember, like, we actually got the Baba and Baidu calls, and that was when the first news came out about the stimulus check, right, JP? So, um,
stimulus check. You mean not stimulus check?
oh, wait, yeah.
The Chinese government injecting stimulus into their system. Stimulus check.
Yeah, you could clearly see how dumb I am. But yeah, the stimulus injection or whatever JP said, we'll just pretend I said that right now. Neo, it's finally getting in. It had that strong push, and we caught this move on shares and on options, and now we're back at this level at 495. And this is an interesting area where you want to look at because, I personally would favor Neo as a company versus Lucid. And Chinese companies, you can say whatever you want about them, but eventually they do have innovation and everything going on, and the recent news about the stimulus injection. We could possibly see a short squeeze up to $9 or even $11. So I currently have shares on Neo. I'm not too heavy because I did take off some shares. I did take off a decent amount up here when we tested the prior support. So I trimmed majority of my position. I got an entry down here at 388 or 384, something like that. But yeah, I personally might be adding shares for Neo down here, and that's just what I personally would look at Lucid over. I mean, I personally look at Neo over Lucid, if that makes any sense. Um, but we're coming up almost to the wrap of our call. So if you guys can go ahead, ask your final questions or final tickers in the Ask Us chat, and we'll go over them very quickly before we get off because it's about to be 2 hours. So meanwhile, you guys put in any questions if you do have any questions. Um, the question that was asked is, would low of day be invalidation? And I guess you're referring to the meta trade, and since it's 0 DTE, yes. But if it was not 0 DTE, I would use the low of day as a possible area where I would average down. If it's a valid place to average down. If it's just an empty place where it just bounced off of, then no, I'm not going to average down. The ticker that was asked was an ANET. Do you know this? JP?
Nope.
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 Okay.
ANET. I've seen people trade this, but
Yeah,
what
I
is
personally, huh?
why? The only thing that I know about Arista is that an old record label called Arista, but that's it. I don't
I
think this is
see.
something in the
Well, I
music
mean,
industry.
it's a what is this? This is a computer peripherals and tech stock. So, I mean, it's pretty strong. Definitely share stock more than anything. Has earnings coming up next week. One thing I personally do like is this consolidation, and then you do have this previous resistance turn into support, at 376.71. You do have a bull flag forming, so if I were to personally take anything on this, I would like for it to come down just a little bit more, probably to here, to enter, because at this point I would be too late to chase it. But then also at the same time, might not retrace that point because you got this consolidation over here. So to continue the bullish sentiment, you probably will have a higher low. So maybe it won't come down to this range. But I would be personally bullish on this, just looking at it. Maybe the upside is not going to be as huge as it's been, because you could see a lot more volatility has stepped up into the stock. So yeah, personal 2 cents on and ET. But you guys can feel free to just put in again like the last few questions or last few tickers. We'll go over that and we're gonna call it a wrap. I'm gonna take a sip of water, so just give me a minute.
Is there a level down here that I'm not seeing? As we're waiting on Kevin, I'm actually charting ES. Not ES, I'm sorry, the S&P again. God forbid,
No, I mean
I not rechart.
I'm actually just like you, JP. If you look at a lot of my charts, they don't have much stuff on them because anytime you guys could literally go for the recordings, for these, the past 4 live sessions we've had or 3. And I'll literally go onto a stock I trade like all the time. Like let's just say for example Apple, and I'll have like 4 levels. I'll literally just delete it and I'll just go back and I'll just look at it because it's nice to have a fresh set of eyes, right? You don't want to be too stubborn when you trade. JP can attest to this. It's similar to why he doesn't average down, right? There's no reason to be stubborn. So, it's
I
always
mean,
good.
if you saw my S&P level, my
Mm.
S&P chart, you would probably look at it and be like, Jesus Christ, that's a lot of levels. But, you know, it's what works for me. And I don't know, Kevin, if you want to go ahead and close your stream, and then I'll just share mine so that look at how clean Kevin's chart is compared to mine when it comes to levels. I'm just sharing my screen, and all of these levels to me serve a purpose. You know, all of these serve a purpose, and 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 that's it. And this is me erasing all my levels and recharting now. So it's it sometimes looks like it's a lot, but in my opinion, it's actually not. In my opinion, it's actually exactly what I need for the way that I trade. You know, I
Well,
have my
also
all-time highs.
you day trade this, you don't swing it, so that's why it also makes more
Well,
sense
no,
that you have this on
no,
levels.
this is what I'm looking at. I'm looking at technical levels on the S&P. These are all my technical levels on the S&P.
Yeah.
You know, and yeah, does it look like there's a lot? Yeah, there are. But every time we get into certain areas, stuff is happening down here, and I want to be part of this game. Like, why are these levels so tight with each other? Because there's a tendency for price to get here, and there's either two things happen. We either reject off that 5670 on the S&P, or we bounce off that 74. So this is an area that when we get, it's going to be a tug of war, and whoever wins that war, it's either going to pop or dump. See what I'm saying? But you can even
Yeah.
see that my levels aren't exact. They're just areas. You know what I mean?
Mm-hmm. Yeah,
Yeah,
that ties into what we were talking about earlier.
yeah, that's all it is. So compared to yours, yeah, it looks like a lot, but these things make sense to me because I always have the S&P chart open on a 30 minute. I always have it open like this. I'm always watching that. This right here, what you're seeing is my main chart, and that's it. I got the VIX, I got the bonds, and then I got my weed.
Oh my god.
Yeah. And I haven't even charted ES, and I have to rechart ES. You know what I mean? And the thing with ES, for example, for you futures traders, I chart ES off the 8-hour chart, and there's a whole theory to that. But that's another subject for another time.
Yeah, JP's a nerd basically. That's what I got from all of this.
Pretty much. So, Kevin, I mean, I'm gonna go ahead and close my stream here, and I'm gonna go ahead and say that I think it's time that we wrap it up. It's been what, 2 hours now? We got a couple of questions and a couple of tickers that people wanted us to see. I'm happy that there's people here on a Saturday and it's this late and you guys are here trying to learn and picking our brains. I do see that there's two more questions that they're directed towards you, um, Kevin. And JetNet asked, do you guys look at short float before entering trades? My E-Trade Pro allows me to see the short interest on my watch list there. I do look at short interest when I am looking to take a possible short squeeze trade, but I'm really not looking at short float when I'm looking at the swings that I take, because most of the swings that I take are companies that are not heavily shorted.
That's a good answer. Because short flow doesn't always give you everything, right? Just because it's heavily shorted does not always mean that rally or that pump that you're looking at will just cause a series of short squeezes, right? So there's also usually stocks that have a lot of short float or shorting interest against it. They end up being the more riskier stocks to trade. That's why JP, for example, he doesn't trade any stocks that have a lot of shorting interest on it. So that's
Yeah, like
good.
I'm not trading AMC or GameStop
Oh,
or
screw that. Yeah, no.
what's another one that's like, what's a heavy,
Peloton.
yeah, I can't go near that. It just
Oh
doesn't,
my goodness, dude. By the way, before we get into the ticket I was asked,
10,000%,
Peloton.
right?
Oh yeah, 10,000% on calls that I took. This thing freaking went crazy on earnings. I entered like all the way near the bottom here, $2 something, and we reached freaking $8. That's insane. It's just insane, and it wasn't just like like there's always setups and it's just yeah. Anyway, I had good two earnings, but yeah, pretty insane how Peloton is all the way up here. Right now, I do think it's personally late to chase, but we could see how it reacts, to this area over here. And I personally might add, I had shares for my long term. I had an average of, I think, like 289 or something like that. So I sold all of them at all of them at like 915 or 910 or something like something near $9. But I do want to possibly enter in once it reaches, once it consolidates near this $7 range. Once it consolidates here, then I would really like for it to ride the shares up to a possible $12 test. I know that's off topic, but yeah. Going into tickers, the last few tickers you guys talked about or mentioned, I think we already talked about ANET. Yeah, we did. So then ACHR. Have you heard about this, JP?
No idea what that is.
Okay. So Archer.
ACHR. I
Yeah.
don't know. Archer, it sounds like in the Wolf of Wall Street, the small company, aviation company out of Ohio. Remember that line?
Oh yeah.
With
I think I do.
with
Yeah.
innovative technology.
Oh my
I have no
goodness.
idea what that is, but what do they do?
Apparently they are aerospace and defense. Flying cars concept. Flying car. Flying cars is still a thing.
Oh yeah, what was the name of the company? If oh God, what was the name of the company in aerospace engineering in Wolf of
Uh.
Wall Street?
Uh.
Aerospace.
Yeah. Dude. I mean, the weekly chart is not beautiful. I mean, you're at $3. Like this is a penny stock. I'm not saying it doesn't have upside because it does have a nice, curl over here. And if you guys know, I'm a huge trader in the ascending scallop, which is a bullish pattern. It's one of the oldest patterns, and it's so funny that barely anybody knows about it. I'm not sure why, but uh, I mean, it's the bullish sentiment is there. Would I necessarily put my normal position in, let's say, shares as a long term hold? Maybe not. At least not just yet, because it's not giving me too much confirmation that it'll continue to the upside. I mean, right here, when if I was taking this trade, it wouldn't be a bad area for me to potentially take a starter, very light starter position. Um, I don't know much about flying cars. I didn't even think it's still a reality out there, but it's risky because you never know how those projects kind of go. But yeah, is there a video tutorial about how to use basically option flow? Um, no, there's not, but uh, option flow is a tricky subject. Maybe we'll just go over that in another time. Um, Sorry that I can't answer it now because that's more of a longer answer. IONK and Q. JP, have you heard of this at all or no? Oh my god. I'm guessing no. Um, IO and Q, you saying
I have
it's for
no idea what that is. No idea.
yeah,
I don't even know what they do.
quantum computing for AI, apparently.
No clue, man.
Yeah. It's had a really nice rally. Too strong of a rally in my opinion. So I personally like. Yes, you could technically. I bet this is 38 fib. It's near. It's almost near 38 fib. So if you wanted to not possibly, like, if you're really keen on entering this trade, I would personally enter. I personally would enter around this area. So if your approach is near $13, the safest entry is if you wait. If I would wait for like right over here, $11 to 12.45. This would be personally where I would say would be a safe entry for me. Um, but yeah, it had really. What was the cause for this rally? It's just a short squeeze. I guess it was just a short squeeze. Um, but yeah, let's see. Also, are URA and OKLO short-term trades for nuclear trade? Okay, JP,
Oh,
answer this.
Oklo. Is this an Oklo question?
Yeah, DK asked it. You can
Uh,
see. I'll pull it up on my stream if you're looking at it. It's this highlighted
Oklo.
thing.
I didn't. I mean, we missed the Oklo trade. I mean, I'm kind of again. It's one of those things that I'm not chasing. Look at it. OKLO. I mean, it looks like it's just gonna, you know, it looks like it's just gonna keep going. But I mean, again, we're chasing it when it's up 100% from where we originally got the buy signal. The buy signal would have been at around $10. You know?
Yeah.
Yeah, like the Jesus Christ. I mean, I, is there an ETF that trades uh 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 what's it
OKLO.
called? What is it?
What? AI or nuclear?
Nuclear. Yeah.
I do not know.
It would be
Um,
great to find out if there's one if there's an ETF that trades nuclear because maybe we can get into the nuclear ETF. I think on the long term that's going to be a great trade to be honest.
yeah, absolutely. Let me know if you
Yeah,
find
I'll
one.
look into it.
But yeah, I mean OKLO, short-term trades, tight. So wait, answer this question. Also, are URA and A? Oh my God, OKLO short-term trades for nuclear energy tied to AI? I can't freaking speak, bro. Can you answer this
Let me read that
question,
again.
JP? Could you read it? Because I can't speak for some reason.
Thoughts on IONQ for long-term quantum computing for AI. Also, URA and OCLO short-term trades for nuclear energy tied to AI. Yeah, but we missed the trade. Are you already in it? I want to know if he's in this trade or not. Or is he trying to get into it now? Because if he's trying to get into it now, don't they have earnings coming up? I would wait till after earnings. I would
November
wait on Oklo.
27th.
I would wait till after earnings, and if they have a pullback, then probably look at it for a long-term position if you believe in the company. But I mean, I'm going to look at it right now. Is there an ETF for nuclear energy? Let's see.
While you do that, JP, I'm just gonna go over. I think we're gonna do. This is the last
Sure.
um, ticker we go over, which is AMD. We briefly covered it earlier, but AMD didn't do well on its earnings, as JP talked about. Did good on its revenue, or okay on its revenue. Um, Personally, for me, if I were looking at AMD, I would only. I mean, I had this level from before, 132.36, previous high, turned into support. You had a bounce and close, over here, and you had a bounce over here. So this could, if it retraces to this point, 132, then I would pursue like getting shares around here, and then, testing the upside. There is also this miniature level here. You can see we tested it on Friday. We didn't have too much reaction, but it's the 141.23 level, which is a previous low all the way back in May of this year. So, yeah, this is a possible add. It's definitely risky. I would like to get shares around this area, but I'm not necessarily sure if we will test all the way down here. Um,
I
but
found
as
the ETF for nuclear energy and uranium. It's NLR, by the way.
NLR, but yeah, like we in the since the person asked right now, since they joined late, like we talked about earlier, JP talked about Nasdaq and everything, is not really it doesn't really look that bullish. So there might be some bearish sentiment for major tech stocks, a majority of tech stocks, and then probably might be a good opportunity for buying AMD. But NLR looks pretty nice. You have a nice
I'm
uh,
actually adding this to my watch list.
bull flag on it. It's funny because I did too. And you guys know me, I like when price breaks out of a level and then comes down and retests it. So that's exactly what's happening here. We're getting a closer approach to previous high, which is around 89.42, and you could see we already had a bounce off this trend line, and you could see around this area, so that which indicates there is possible buyers here. So on Monday or on Tuesday, I would not be opposed to looking at possibly getting calls to test the upside for NLR, which again, as JP said, tracks
Low
both
volume,
uranium
low
and
volume,
nuclear.
low volume.
Huh?
It's a low volume ETF, but it's the
Well,
VanEck, so you know that it's getting bought.
yeah. I mean, there's been a lot of if you actually see JP on the volume, there's been a lot of volume since October 15th.
Oh, it's picked up.
A lot. Yeah. Are you seeing my
Okay.
screen?
Yeah,
Yeah.
I'm seeing it
That's
there. Yeah.
that's
Oh,
huge.
damn, it did pick up massively. Gee.
Yeah. I guess that's the whole pump of URA kind of led into this. Yeah. I
Right?
think I think that I'm actually grateful you found this, JP, because this is actually a really nice setup. If as long as it stays validated and valid on Monday and Tuesday, I would not be opposed to entering calls on this. But yeah. Right, I think that's it.
Call it a
It's
wrap.
been 2 hours 18 minutes. Any final words before I say my goodbyes, JP?
Nothing, buddy. I'm appreciative again of everybody that's here. If you guys have any questions, always feel free to message us. We're doing this every Saturday. Please take
Most welcome.
advantage of this free stuff so that you guys can uh, can continue your education, keep learning, and hopefully have some successful trades. And again, guys, do your independent research on stuff and see what's trending, see what's upcoming in different sectors and in different spaces, and find trades. You know, the guy that found UR, what was it?
URA.
URA.
Yeah,
I didn't even know that ETF existed. You know what I mean? So
same.
it's, you learn something new every day.
Yeah, like JP's been trading for 20 years. He's an old guy, right?
Yeah, we're not old.
Handsome old guy. But,
And that's true.
he learns stuff every day. And even though I'm a stubborn, greedy individual, I still learn stuff every single day. I mean, hey, I didn't learn fundamental analysis really until I met JP. And even though JP knew technical analysis beforehand, he learned, some technical analysis stuff from me. Maybe
Yeah.
not that as much, but, we learn stuff every day. So, yeah, keep an open mind about everything. That's the whole reason we do this. But yeah, you guys have a great weekend. 11:19, so I'm gonna go eat dinner because I'm freaking starving. And I'm gonna knock out. Um, but yeah, we can see you guys next weekend. Thanks for joining us. Thanks for being on, JP, and you guys all have a good one. All right,
Take care.
peace.
Later.